I'm Corbett Wall with DV Auction, here with your feeder flash for Monday, December the 17th, where we're not sure if we're going to have a whole lot of cattle purchasing here late in the year, because I don't think there's near as many people that's had tax problems as a lot of other years. So we're not seeing as big a drive to buy bred heifers, replacement cows, feeding calves, feeder cattle of any kind to take care of tax problems, because people don't have too much tax problem really this year, because they hadn't made as much money as they have in other years, and it might give them a chance to kind of get straightened out on their taxes if they have had several good years in a row and don't want to give it all away. But several things happened last week that were interesting to the industry. We did see that they have decided to let the electronic logging device just go by the wayside for livestock haulers and insect haulers for until further notice. They're exempt from having to have electronic logging devices, which is really a big breather for the industry, because that just was not going to work. Got to haul these cattle too far, and it's not feasible just to pull over the side of the road and sit there and rest while those cattle are having to suffer on the truck and sucking diesel fumes and all that. And sometimes livestock truckers have to just rest up, make a big long haul, and then rest up again, and you can kind of make that work with a paper log, but with electronic logs, you just it was not going to work, and it was really going to cripple the industry as far as shipping cattle very far. But another thing that happened is JBS out of Greeley headquarters there, one of the big 4 packing plants, Brazilian owned there, they agreed to pay a $50,000 fine that P&S put against them for not doing a good job of keeping track of cattle that were sold on the rail at their Grand Island plant, and had a producer there that just smelled a rat, knew that those couldn't be his cattle, the paperwork that he got back, and then they went to find out that they either had a computer glitch or they just weren't doing enough to make sure that they were keeping those lots lined up, and different producers' cattle coming through, and weren't keeping track of the grades, the weights, the prices, and things like that, which is just pertinent to if you're going to be doing business on the rail like that. And but you look at that $50,000 fine that P&S put against them, that really just goes to show how out of touch P&S is with the industry, and it's not going to be a big deal if Secretary Perdue decides to do away with that whole entity there. But let's look at the board for last week. December live cattle futures ended the week at 119.57, up 167 for the week. February ended at 122.40, up 88 cents for the week. You look out there, and it's really hard to find any hard yearling cattle that are heavy enough that you can hedge and tie to the April board, and not just the ones you want to take to a big heavy price, but we're getting right in there now where it's just, even when we were feeding for efficiency more, is not quite enough time to get those cattle hedged with the April board. But it's sitting at 124.50, and then you go off the deep end to June at 116.07. The reason why it's so tough on the market on these feeding calves. But January feeder cattle ended the week at 147.57. That was up $3.20 for the week. Real strong board actually last week, and nobody saw it coming or could find a reason why that the board was supportive all of a sudden. March feeder cattle 145.77, up $3.90 for the week. Fat cattle trade was pretty decent. Southern Plains got steady money at 119, which was a pretty good showing there. There was a minute we thought we were going to get maybe 120. There was a major packer out there looking around to buy cattle for early January delivery at 121, and so we thought maybe 120. But actually you can contract cattle basis the board for a buck back of the February, and that's as good as that 121, and we should still be gaining some ground after we get into the new year, but going to be tough to probably gain any more ground during all the holiday interruptions for these packers to get their cattle harvested. But 119 steady in the southern plains. In the northern plains, they sold cattle kind of through the week and early in the late part of the week, 116 to 118 live. But late, you could get quite a bit of 119, but not in the areas where it's the muddiest. Mostly in the western part of Nebraska and out there, you could get the 119, but right in there where it's the sloppiest and those cattle are carrying the most tag, really hard to get a live price. Mostly you're just going to get the packers to bid you dress because they don't want to have to worry or guess how much tag or mud or really dead weight that's going to be hanging on those cattle's hides. So they just soon weigh them up after they get the hides pulled off. And your packers really don't want to stand any liability. A lot of them are going to want everybody to be BQA certified. Beef quality assurance, which is basically just going to a training session and getting certified to do that, where maybe you can stand a little bit more liability, and they can always come back and say, well, you knew you weren't supposed to give shots in the rump, but that's just another way the industry is going. Box beef cutout values for the week last week, your average choice cut $213.11, that was down 32 cents. Choice was up big, and it's just not, or select, select market was up big, and whenever we thought it was going to be getting cheaper, there's just not a lot of select product out there right now for outfits that feature select product. But your average select cut trade last week, 201.61, up $3.16. Choice select spread, $11.50. Pretty darn good movement, better than what we thought at 603 loads of cuts, grinds, and trimmings. Slaughter was also good. We had that monster week before last, 667,000. That was huge. Well, last week wasn't too bad either, 654, still one of the bigger weeks of the year, and that was down 13,000 from the monster week, but up 26,000 from the same week a year ago. Let's look at our feeder markets. We've had such a rough week before last. We lost so much ground, and trade this past week was a whole lot better. And everybody I talked to in pretty much every area said it was just so much more active. Demand was better, and it wasn't swamped with quite so many cattle. But we've had heavy receipts all year long. Year-to-date auction receipts in the sale barns. The largest since 2011. You think back how our supplies have kind of been running, and that sounds pretty believable there, and it is. I used to do that report, and I was collecting the receipts back in those days, so they were right back then. But let's look at your cash trade. In the sales, $2 to $6 higher, and that was a big recovery. Not as much ground as we had lost the week before, but got back probably the big portion of it. Your real-time index on Cattle Market Central late in the week at 143.23. That was up $2.32 from the end of the previous week. Look at a couple of individual quotes. A big calf price up north and in South Dakota there at St. Onge. 107 head on Friday in St. Onge, South Dakota, weighed 458 at $189. And then in Bowling Green, Missouri, Angel Sale Barn there, right on the Illinois line, Eastern Missouri Commission Company, 73 head of 729-pound feeder steers, $158. And that's your feeder flash for Monday.